Hey guys, if you've been following me and you watched last week's video, I talked about big roles, big assignments coming. That was this past week for sure. This is also take two. I literally just spent the past 20 minutes talking to myself because I didn't press record. So we're going to do this all over again. For those new here, I share the previous week's trades on all my options. I share everything, losses, opens, closes, rolls, all that good stuff. And this one didn't disappoint in the rolls department for sure. So let's just get started because it's a long one. We'll sort this by date. From May 16th, QQQ. I had a 298 strike on it. Closed that one. I had collected premium of 1424. Bought it back for 1093. Profit $330 in 7 days. And I rolled that out to another one down here. We'll talk about that in a second. DXC Technology, was happy to get out of this one. I exited for $45. Profited $24. Took a long time for that one, 48 days. Probably won't play that stock again. For those familiar with the 1111 trades I've been putting on, you'll have to look back at the week of May 5th videos, and maybe I'll put a link to a video about it. But it's basically kind of an insurance play. You make more money if the stock goes down. In the long term, in the short term, you'll make money if it goes up. And this point, and this was a short term one. So I closed out the 240 and the 250 for a $48 and $51 profit. Closed out the debit spread of 314 and 308 for a loss of 124 and a gain of 177 respectively. So all in all, about $150 in profit in that trade over 12 days. Now that QQQ, remember I bought that back for 1093. I resold it the same day, kept the same strike, but added, I believe, 4 days to it. So I sold it for $11.37, bought it back for $9.02 for a profit of $233 in 1 day. And then I rolled that out and reopened it at $298. We'll talk about that here in a second. Still got that one. Here's the start of the big time rolls. SOXL had 5 of those contracts. Had originally collected $1.55, closed them for $3.12 for a loss of $784. TAN had a 70 strike on it. Originally collected $1.85, closed it for $5.43 for a loss of $359. Ford originally sold that for $43. Exited it for $1.18. I'm sorry, sometimes I speak in hundreds, but all these numbers are times 100. So I collected originally $43, bought it back for $118, realized $77 in loss there. Bank of America, sold it for $71, bought it back for $295, loss of $225 there. All these I've rolled, by the way. SPLG, that's the S&P 500 ETF, originally got $65, bought it back for $263, loss of $198 there. The big one, ARK-K, bought that one back for, originally sold it for $146, bought it back for almost $1,500 a piece. So a loss of $9,477. And then Dutch Bros, I was going to take these shares at $50 because I am a long-term Dutch Bros bull. But they ended up giving me like $65 or something like that to roll it out a month. And so I just decided to take the cash. So I bought that for $23.25 or $2,325. Originally got $265 for it, so took a $2,060 loss on it. Dutch Bros, this is a separate one. I had a 25 strike out on it. Sold one contract, collected $88, bought it back for $8, so profited $78 there in Dutch Bros in 6 days. Now I got to the assignments here. XYLD assigned 100 shares at $47, so that $60 gets banked. TQQQ, I was early assigned 300 shares at $40 a piece, so that $360 is banked there. QQQJ assigned 100 shares at $27. I'll probably just hold on to those. I like that ETF, so that $60 is banked. QILD assigned 100 shares at $19.50 there, so that $30 is banked. Now I got over 1,000 shares of QILD, and I am really considering selling out of QILD and putting it into something that can participate in a market recovery, or participate more in a market recovery, because QILD won't. It may recover back to where it was a little bit, but it won't recover and keep going. You can see that price action there. If you go back to March of 2020 and look at the price action, it will recover a bit, but then the upside is capped. That's just what the covered call ETFs are. So those are the closes. Let's take a look at the opens from all the rolls. So we'll go down here to 516, and there was that QQQ roll that we closed, but then there was the one I reopened, just rolled it out, same strike, added a few days to the contract, collected $965 on it. The SOXL, there was good premium here because when I sold these, it was closer to the money, and so I sold 5 of them at the same strike out to June 10th, and got $453 for each of them. So collected $2,265 off of that roll. TAN rolled that 70 strike out one more month, collected $708 on it. SPLG kept the same 49 strike, rolled it out a month to June 17th, and collected $298 there. Ford, again, kept the same strike, collected $148 for it a month out. Bank of America, again, kept the same strike, 38, and collected $349 for it. Dutch Bros added a 25 strike out to June 17th, got $178 for that. Here's the rolls for the $50 put on Dutch Bros out to June 17th. Collected $2,390 on it. And then the big one, ARK-K, same strike, 57 out to June 24th. Collected $1,548 for each of those, and there's 7 of those, so $10,840. So my plan is to kind of squeeze this for some profits. And anytime we have a spike, since we did this at 42, so pretty much anytime we have a spike above, like if it goes to 43, I might have $1,000 in profit here. I'll probably just squeeze that off and either add a week to the contract, or I may even reduce the amount of contracts, because I'd be happy at this point in ARK-K's life to get half of this premium. So if I can get, $5 grand out of this, squeeze $5 grand out of this ARK, I'd be happy. And then I'd go live and fight another day and go make that money somewhere else, basically. So that's it for the opens. Let's take a look real quick at premium cooking. Again, May 20th, week ending, closed 12 positions, open 10, profit realized negative $12,363. But of course, we rolled, so premium sold far outweighs that. So we collected $18,135.68 in premium. If you look over here, I have nothing expiring until June 10th now, so I can kind of live easy for a couple of weeks. And I tried to spread it out a little bit. So not until June 10th, I have 2,200, then June 17th, 4,600, and then June 24th, 11,800. So either next month we're going to have another week like this that we've had in the previous few, or we're going to have some good paydays. I have a feeling it's going to be a combination of some good paydays and some rolls. So when you roll, you're just pushing profits out. You just keep pushing it out further and further, kind of increasing your liability, I guess is what you can say. But you're assuming all the downside that is in those contracts. So you're paying for the downside, basically. So that's what I was saying with ARK. Anything above 42 right now will make me money. Total premium cooking, $18,725. So what that means also with the ARK having such a big position, because there's $10,000 here of just ARK. So that just means my account is going to be extremely volatile, especially having those 300 shares of TQQQ as well owned. So my account is going to be swinging pretty wildly with the market. So it's going to be disconnected kind of from the market, because typically my account has moved with the market a little bit as far as daily moves, but now it's pretty disconnected. Maintenance margin 38,000. So maintenance margin went down. That's because we're probably buying shares is probably what they're it's the even being assigned doesn't really affect your maintenance margin. Buying power used 39%. Cash balance is down 20 grand from to 35,665. That's from the TQQQ shares, the QQQJ, XYLD, and there was another one in there. I forget what it was though. QYLD, XYLD, QQQJ, TQQQ. No deposits, no withdrawals. I'll probably throw some money in, some excess money in here next week, or this week, I should say. NetLick, lowest it's been all year to 96,700. Return on maintenance margin, negative 30%, and return on NetLick, minus 12%. That doesn't take into account any rolls or anything. That's just strictly profit realized divided by the maintenance margin of the previous week and the NetLick, respectively. So how are we looking year to date? Surprisingly, even with all this, not horribly bad. Started the year at 123.1. Final value Friday, May 20th, 96.7s with a decrease at 21%. But comparing that to a couple of indexes, it's not horrible considering, the type of stuff that I trade and things like that. So if we look at the S&P, the S&P is doing better, down 18%. Russell, I've always thought that my account would kind of track the Russell, and it really kind of has. Russell's 21.97% down. We're 21.44, so I'm right there with the Russell. NASDAQ down big, 28.28%. This is why I am kind of hesitant on dumping the TQQQ shares, because I can dump those 300 TQQQ shares and just replace them with puts. Or I can add to TQQQ. It's really 28%. That's a big number, you know. To me, I'll discuss it I've probably have discussed this in the live last night. I don't know if we got much further to go. We might have a little bit to go, but I don't know how much further. Dow Jones holding up everybody, down 14.5%. So what do we got for earnings coming up? Because last week we had earnings of Target and Walmart, and the market really punished Target. And I don't know if that was justified, honestly. There was one little snippet there that in the report that I just read the highlights, and it said that Target store traffic increased 3.6%. So that means people are out spending money. Yeah, behind the scenes, their shipping costs and all that stuff. That's everybody, right? But to me, it seems like the consumer is still in good shape. We'll look at who's reporting earnings this week. NVIDIA, they've been getting beat up. I have a feeling, with a PE of 43, I don't know. They could just kind of languish there. BABA, it's China. Man, I got some people that are in Alibaba pretty big, and I hope they can turn it around there. Costco's been getting beat up because of the Walmart retail thing, Walmart and Target. But I gotta tell you, I hate going to Costco. Target was talking about increased traffic in their stores. Costco, every time I go there, it is horribly, horribly busy. So I think their punishment there, they might prove everybody wrong, but I could be wrong too. But Costco got downgraded, and on top of the Walmart Target reports, they really got punished. So 380 right there is really in the crosshairs. And when they report earnings, that level there, 350. If that doesn't hold, 350 could be in your cards on Costco. So that's it, guys. Hope you guys enjoyed take 2 on this one. Hopefully it didn't go on longer. I tried to make it a little shorter, I hope. Hope you guys enjoyed. Like, share, subscribe, all that good stuff. The algorithm likes my audience to leave comments and thumbs up. So if you're my audience and you want to help the algorithm, leave me a thumbs up and a comment. All right, guys. You guys have a good one. We'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.